One of the biggest questions, open questions in crypto is, are the institutions coming here to give us money or are they coming here to take our money, right?
Take.
Feels like they're coming here to take our money.
GM, everyone. Welcome to another episode of Open Interest, a podcast where we're trying to cover everything from trading all the way from the infrastructure level all the way up to the top of the chain with fund managers like Pratik here, who are managing lots of money from LPs and trying to get them the best returns on their crypto. Pratik, thanks so much for jumping onto the podcast. Maybe a bit of context. Apollo is one of the investors of Faro, a trading app that we're building, and Pratik leads research at Apollo. Do you want to give a quick intro on yourself, maybe a bit about your background, and then we'll jump straight into what's happening in the markets?
Yeah, good to be here, Abhi. My name is Pratik Kala. I'm the head of research portfolio manager at Apollo Crypto. Apollo Crypto is a multi-strategy cryptocurrency hedge fund, 100% focus on the crypto asset class only, very active on-chain and also within the ecosystem broadly. We have been running these funds for 7+ years, have over $100 million of assets under management, and been very exciting times for crypto over the many cycles over the past 7 years. Personally, I joined Apollo Crypto about 2 years ago. Prior to that, I was at another hedge fund, and before that, I was in traditional finance, working for the likes of JP Morgan and National Australia Bank. So been there in traditional finance and shifted to crypto. Was in traditional finance for a decade before I made the switch to crypto. But even within crypto, I was spending a lot of my evenings doing a lot of crypto stuff since the beginning of 2015. So started off Bitcoin mining and then Ethereum ICOs, IDOs, and everything else around that. So been around for a while in crypto.
Love to hear it, man. And I feel like Apollo is like the MVP of Australia when it comes to the crypto space. We don't have a ton of representation down here, but I will say that the people in Australia who are building in crypto, we have like Kane down in Sydney, and then we also have the Rocket Pool team, and obviously you guys as well. But yeah, really keen to have you on the pod. The past week has been pretty crazy in the markets. We went from I think it was like April 7th, Trump saying he's going to end Iran as a civilization. And now we're at a ceasefire. And stocks, equities, commodities have been jumping up and down constantly over the past weeks. We saw oil drop like 20% after the ceasefire announcement. US equities have been dumping. And more recently, at least tech stocks have rallied going into the news. What's your take on the market, maybe over the rest of this year? How do you think this conflict is going to pan out, and how is Apollo positioned right now? Because crypto is like very high beta, right? Crypto is probably the thing that's going to get hit the most if things go bad. But I don't think it's going to go up a lot if things recover. I think crypto still needs a bit of time. But yeah, I'm curious as to what's your take on the market right now.
Yeah, first of all, it's been a crazy couple of months of actively managing a portfolio with Trump in power. I thought for the last 2 months haven't slept that well because just following everything around the war and if it's going to escalate or around oil pipelines, everything else like that. Then when the ceasefire news came out, I was refreshing Truth Social because I knew that there was a deadline at 8 p.m. ET or something, and refreshing Truth Social like every 5 seconds to see what the update is. When I saw the ceasefire, I was like, oh, fantastic. Let's, max long. This is the biggest off ramp, and the announcement seemed very positive, and it looked like it was, going to sustain. Obviously, less than 24 hours later, we are now seeing that, oh, well, this is not we agreed to. Ceasefire is being violated, this and that. So it's very difficult for any body to trade this. I think everyone's been smoked, whether it's commodities, equities, whatever asset class you're in, the volatility has just gone up. So very hard to see where the next couple of months is with regards to Trump being in power and in office. The end goal is obviously Trump denoting and referencing the S&P being an all-time high. So it's definitely on the back of his mind. And in his recent speech, I think he said that he thought the S&P would drop a lot more during the war, but it did not. So, he himself said he was surprised himself. So I think it hasn't hit his pain point. But if the market were to drop, I would say S&P 15-20%, it would hit his pain point, and then you would almost guarantee a permanent off-ramp instead of this whipsaw on, going into the war and outside of the war. Now, anybody can comment. There's millions of pundits on the war. Nobody really knows what's going on aside from a close circle in White House. So my opinion there is just going to be an opinion. But I think it's a midterm year. I think the war is unpopular with the majority of American citizens, and even within the MAGA camp. They're diehard supporters that support it, but there's more and more people that are not happy with it. And even outside the Americans, forget about the American citizens for a moment. the Middle East situation with a lot of allies with Saudi and a lot of the allies that the US has there, they're getting bombed and nobody likes this. Dubai is a huge financial hub and a huge international destination, and having their airports bombed is not cool. So I think there will be like this can go back and forth, and Trump's negotiation style will go back and forth. But I think we'll see an end to this war in a bit. It would really surprise me if he turns around and puts boots on the ground in the next 2 weeks. So I think it's an off ramp, but like what happens to the strait and stuff is still a little bit of a question mark. And the messaging out of the White House is very inconsistent because yesterday on Trump's
Yeah.
tweet, he actually wanted to work with Iran to make money
Yeah.
from the tolling of Strait of Hormuz, and now he's saying, "I can't believe they're tolling it, and this is not we
Yeah.
agreed
It's
on." So
crazy.
it's the opposite of what he's saying. So it's very, very difficult to trade this. Now, coming back to crypto took a big beating in February, way before the war even started. We were down significantly before the war started. But during the war, I've been very optimistic because we have been sticking around the $68,000 mark since February the 5th. So bad news and bad news and bad news kept on coming, whether it's the destruction of a civilization or bombs and the escalation of wars. But the price of Bitcoin specifically did not go much further after the 60K dipped to 60K, stabilized at 68, and sort of stayed in that range for the last 2 months. So I think the market for Bitcoin wants to go up, and we're just waiting for some clear decisions and off ramps on this for it to go up. So I'm optimistic on the rest of the year with regards to the price of Bitcoin and select crypto assets. But again, anything can happen. I think if we were to go much below 68, 67K, it would be very bearish again. I think we will stay and remain above that level, and the market does want to go up. We've got a lot of fundamental catalysts to take it higher. But again, yeah, with the war situation, it's very hard to predict what's going to happen.
Yeah, I think one of the biggest fallouts we'll see after however this war resolves is, I think, at least in my opinion, like oil has structurally changed. My take on how the Strait of Hormuz is going to look after this is essentially that Iran is going to have this toll gate operating. And I think this is because if you go through like the 10-point plan that Iran put forward, like one of the points was Iran essentially wants like war reparations from the US. And I don't see Trump ever giving this to them. And I think the way that they sneak this through is by essentially allowing Iran to have a toll gate, and it being this like Trump's narrative of like rewriting the Middle East, and the Middle East now having financial ties back to the US, and trying to paint the narrative that Iran plays a similar role to the role of the Gulf states have been playing. And I think my concern for the rest of this year is I think we're yet to see the worst in the CPI print. I think inflation is going to be an issue, not only in the US, but across the rest of the world. Like here in Oz, we're already seeing banks raising rates now twice in a row. And I think they're expecting that rates are going to continue to go up. For some reason, we're getting hit by the petrol prices pretty badly. You would expect that we wouldn't, but we are. Yeah. What's your take on like, because I think what the market needs right now is a reversal in fiscal policy. Trump's been talking about this a lot. He wants to drop rates. What's your take on what fiscal policy, at least in the US or maybe globally, is going to look like over the next months?
It all depends on the CPI print and the so-called independence of the Fed or the Reserve Bank from the ruling powers. I think a lot of the reserve banks globally are somewhat independent, somewhat, I'm going to say, with quotations, because there is no doubt a lot of influence from the current party in power on the policies, on what they want to achieve as well. So fiscal policy around the world will depend a lot on the inflation prints, I'm sure. Like there's no way you can have a CPI print of 7 or 8% and then go like, oh, we're going to cut rates instead, because that would just be in hyperinflationary territory then, because the rest of the market just got to dump your bonds immediately. They're going to say that, okay, these guys are printing high inflation, but they're easing anyway, so time to dump the bonds. So the bond market's the one that's going to break, going to decide whether or not you could cut rates into this environment, and the CPIs will drive what happens to the bond market. So really depends, but Fed's got Kevin Warsh, and I mean, Trump's got Kevin Warsh, and he's joining in next month. I think 15th of May is when Powell ends his term. So he's still going to have to get consensus with other people in the Fed committee. And if he can drive it and try to drop rates, if that's what Trump wants, then that's fair. But again, it's going to be dicey if inflation's hot. And it specifically impacts globally countries that have a lot of oil imports and that are not denominated in USD, obviously, because their currencies are going to weaken and then inflation's going to be even higher. One thing's for sure, but that the oil picture has definitely changed. A lot of people are going to have domestic energy sources now. No one's going to rely on constant flow of oil from the Middle East after this.
Yeah, it makes sense. And I think like to your point about countries that rely on imports for the Middle East, I think we're seeing Asia hit the hardest right now. The Bank of Japan is already starting to sell off its assets to try and protect the yen. The yen has been hovering around that 160 range, where the Bank of Japan tends to step in and try to stop the yen from getting any weaker. And so I think we're in a precarious situation. But yeah, I think it's very hard to say how the US is going to deal with this, as I think like just with the way that oil shipments work and these shipment parts taking so long, even if things do resolve in the strait, there's still a structural shortage in the flow of oil. And I think that's just going to lead on to a continued higher print in the CPI. Maybe moving on from sad stuff about what's happening in the globe. You've been an avid bull of Hyperliquid and Hype. You guys have allocated into Hype just before it had this massive run up. What was the thesis to? I think the thesis is clear now. Everyone, I think HIP 3 had a really slow start, and people weren't sure if HIP 3 was the right way to do it. A lot of the other perp dexes took the other part, like Lighter just decided they're going to do everything in-house, whereas Hyperliquid just said, okay, we're going to do crypto perps in-house, but then everything else outside of this, we're going to offload onto other teams. And I guess people weren't sure if other teams were going to execute. Evidently, we're seeing that teams like Trade XYZ and Dreamcash have been able to execute quite well on like the RWA trading on chain, a lot better than Solana's also had this thesis of like on-chain capital markets and trying to push RWAs, but I think it's been the most well executed on Hyperliquid so far. What was the thesis for you guys back in the day to buy Hype? Like, what were you guys looking at that the rest of the market didn't see at the time?
First of all, I think Hyperliquid, one of the reasons is there were so many perp dexes going on in the market. DYDX was dominant in all of that. Hyperliquid came surprisingly. It actually came on my desk. I looked at it and I'm like, it's one of the hundreds out there. And at that point in time, didn't know what would differentiate it. It launched, and all of a sudden, some people close to me got anywhere between a 1 million to 10 million US dollar
Yeah.
airdrop. And I'm like, is that money real? And they were able to like they showed me the wallet, and I'm like, what just happened? And then there was this entire Hyperliquid sort of cult going on. At Hyperliquid, that at that point was $4. I think it was like $6 or $7. At which point I decided to go like, right, I'm gonna log in and use the product. I used the product and I was very, very, very impressed. I've used Binance, OKX, Nexi, or the Poloniex back in the day. I've used Korean exchanges as well, like to get some coins that weren't. And Hyperliquid's experience was just phenomenal. It was a clean interface. It worked. Liquidity is tight. It was very easy to understand. And the best thing that I liked was the P&L tracking was very accurate. In a whole bunch of these other platforms, you don't really know what your P&L is. You have to do a lot of work. But for Hyperliquid, it was really, really good. And when you export it, some small things like that, when you export it to CSV, like a history of your trades, it had all the datetime formats correctly. You could very easily, intuitively calculate it. Surprisingly, even the largest exchanges, when you export it, it's like the date time has to be adjusted, then something else breaks. It's like a mess. So it gave me confidence that Hyperliquid was built by a really strong team, because these small things that big exchanges with multi-billion dollar capital weren't able to fix. Hyperliquid fixed it in its very early stages. Obviously, read a little bit more about Jeff and all of that, and I'm like, all right, so this seems really, really good. So we took a reasonably big position. Typically in funds, you have a maximum risk allocation to coins. Our max position size was 20%. And over again, I think we had to debate internally if we want to make an exception for Hyperliquid. So it's good to see that Hyperliquid's grown that much. Surprisingly, grew over 20%, about three times, and we cut it back below 20, booked profits. And then, we continued, like right now it's above 20, and we're happy to run that position at the moment. So Hyperliquid, I mean, phenomenal product, works well, executes well. It started doing pre-markets. It was really, really good. Was doing the hyper unit came along, so you could have native assets, spot assets, that was doing really, really well. So overall, the product is just phenomenal. And the token is even better because it is getting a piece of Binance or OKX or Bybit that is like at a 99%, like 99% buybacks. It's just unheard of. It's phenomenal. You can track it. It's transparent. It's simple. None of the crazy mumbo jumbos of, hey, if you buy this token, you get access to that token, but then that token burns at a different rate, and then that token then merges back into this token. Like, that's a head spin. I think we've done that so many times. Hyperliquid is clean, phenomenal product, great revenues, great team, and everything was good. So we took positions in that. very early on and continued sort of adding on any major dips since then. And right now, of course, it's a sizable position of our portfolio. HIP3, very bullish. I think which approach works over the long term, it's the market will tell. I am a big believer in like not doing everything in house. Hyperliquid runs a 10 to 12 people team. People say that, oh, just hire 20 people and do it all in house. It's not as easy. I think the culture to get accurate, like to get a really apex awesome culture, you need a small team that are all switched on people. Can't just add 20 people with different views and like expect the product to work just as well. So I think offloading it was probably good. And look, if it really, really works well, Hyperliquid can do it in house because as we've seen recently, there are differences in the contracts that are being quoted for Brent oil on Trade XYZ markets versus the ventures, or not ventures, but the KM markets versus the one of the other markets. So they're all using the near dated future, the long dated future. There's arbitrage opportunities between them. They're not really tracking the price accurately. So obviously that causes some confusion, but I think they'll work through that. And when the market becomes big enough, Hyperliquid may choose to do it themselves natively, which is still very positive. So very positive on Hyperliquid. The product's phenomenal. Excellent tokenomics. Team has been delivering excellent execution. So everything is very positive for it. The biggest risk right now is obviously, after the hacks of Drift and what happened with
Drift,
Resolve,
yeah.
pretty sure the DPRK is eyeing Hyperliquid and how to get in. Their security apparatus, last I checked, was for people multi-sig. Maybe it's changed now to 6 or 8. I'm not sure, but it's still a very important attack vector, which no one really has a clear answer to. So hopefully they are transparent and make it, ironclad. So that will give more confidence as well to a lot more other people.
Yeah, yeah, that makes a ton of sense. And I think it's like, it's definitely more of a concern now is like with tools like AI. I mean, Claude just are starting to talk about like Mythos, stuff like decompiling binaries back into what is essentially the source code is just magnitudes of orders of magnitude easier now than it was back in the past. Like before AI, stuff like not open sourcing your code was somewhat of a defense mechanism because if you look on chain, all you have is the bytecode, and there's not a ton that you can do with that unless you manually decode it. I think that's gone, and a lot of protocols are seeing that nowadays. Not exactly what happened with Drift or Resolve. I think those are different issues, like OPSEC issues, but yeah, I think it's a point of transparency that is a hard line to walk for the Hyperliquid team because how much do you share without compromising OPSEC? On HIP3, in its current state today, there's a lot of different markets. You have like the KM markets, Dreamcash, obviously trade XYZ. From the current state of where HIP3 is today, for it to have this continued success, what would you, as like a fund manager, more on the traditional side versus a retail user, what would you like to see on these markets that you're missing on a Binance or a Bybit?
I think the majority of the users on HIP3 today are actually institutions. They're running a lot of arbitrage strategies, a lot of delta neutral funds, and the nuance that I was talking about around the differences in the contracts between Brent and CL on different markets and how to actually arbitrage that. So I think a lot of them are actually institutions and more of them are coming in. And obviously retail loves it because you could trade on Saturday. Great example is when the off ramps happened, the oil market was closed in the US. And when Trump said there was a ceasefire on Hyperliquid, if you were quick to the trigger, oil dropped 14-15% while traditional markets were closed. A lot of people are actually participating in that because people love, in the instant 24/7 world today, like to take trades. They get dopamine hits doing it. So I think HIP3 can continue to grow volumes. What would I like to see on HIP3? I mean, they're obviously listing a lot more assets. The liquidity is improving on the deepest assets, but there is a gap with regards to transparency or maybe there isn't, but it requires a lot of mental work to determine
It does,
how
yeah.
the contracts are priced. I think a uranium contract's being priced on Hyperliquid. At least they've got the ticker now. And there's not much information on what the underlying price source is. And maybe it's somewhere in the docs on Trade XYZ's documentation, but like it still requires a lot of mental work to figure out, what the price is and what the liquidation risk is, who exactly are the market makers, and all of that. Because there's still a risk whereby, you take 100K, a 500K position in uranium or one of those offshoot assets on one of these markets and there's a week down and you get liquidated. And maybe even the real price hasn't even shifted there, but the pricing mechanisms and stuff are still a work in progress for some of these. So that would actually, once they resolve that and get some insto grade sort of operators there, I'm not saying that they're not there already. It's just not that visible on who's making markets and how big the liquidity is and whether or not there's a rug risk. I think once there's more transparency and confidence around that, then the market will continue growing on HIP 3. And the biggest risk for HIP 3 is if it gets big enough, Uncle Sam's going to come knocking on the door because a lot of the assets being traded there are US based. And let's say Hyperliquid traders made $5 billion in profits or whatever over a year. That's a big number, but let's say they did. Yeah, there's no way that Uncle Sam's not going to come knock on the door saying, "Hey, where's my $1 billion in taxes or whatever capital gains taxes? Like, I don't like this non KYC AML nature of this." That's a little bit of a risk. Hopefully, they decentralize quickly and we get more confidence there. But I think under Trump, we're fine. Let's see who the next president is, but that's definitely one of the biggest risks for Hyperliquid.
Makes sense. So you think there's a bit of like presidential risk with the state of HIP 3 today?
Yeah, I mean, look, even with Trump, I think we're good. But if you look at Trump, he just threw like 3 or 4 of the previous MAGA supporters under the bus in a tweet this morning. Megyn Kelly, Candence, like they helped him get elected in some shape or form. So he threw them under the bus. So even with crypto, if crypto guys are making a lot of money and he's like the US government's not making it, he could turn around like with the ceasefire and say that, hey, I don't like this exchange making this much money on American hard work and we need to tax this. So that could be very negative. I'm not saying it'll happen under him. It's not big enough yet, but when it does, it will be.
Yeah, makes sense. Makes sense. Is Apollo doing much on HIP 3?
Our mandate is to crypto only. We can run neutral trades using HIP 3. We found HIP 3, the funding rates to be extremely volatile. So you can go from positive to negative multiple times a day. Our preference is obviously some sort of sustained funding rate that we could, sort of size in and hold on to for some time. So at the moment, I don't think we obviously watch it and we've constructed like a way to operate in those markets. But so far, we haven't pulled the trigger. We tried doing gold and silver in its mania phase, buy spot gold and then short on Hyperliquid and collect the funding. But the funding was too violent. It's like positive, negative every hour, every 2 hours. So very difficult to consistently manage that for now. So yeah.
Yeah, that makes sense. And maybe that's a good segue into you guys run a market neutral product on Midas. There's been a lot of blow ups, I feel like, in the space over the past few months. MEV had a massive blow up last year across multiple different things, and I think a lot of the morpho curators are coming under scrutiny. Even the ones that we thought were good, like Stakehouse and etc., are coming under scrutiny. How do you guys as a fund risk manage something that's meant to be market neutral? You guys have exposure to a lot of different assets. What does the process look at like this institutional level for you guys to risk manage a product like that?
Yeah. So we've been running on-chain market neutral funds for 7 years, 6 to 7 years. One of the first in the industry. We started the market neutral fund in 2021 when on-chain was not even like that deep. There weren't even that many options, but our mandate was still to go fully on-chain. So a lot of the neutral funds do a mix. They go on centralized exchanges, decentralized, they balance in and out. We were purely focused on on-chain only, so very well experienced in all things on-chain over there. Some of the key things look like it's very difficult to know like if there's a 0 day bug or some risk in some contract that even all the security fund firms in the world were not able to pick up. But we have sort of max risk allocations and bucket allocations to a chain and protocol, obviously. And when we're operating, we're predominantly in stable coins and also neutral trades such as ETH trade looped up with EtherFi rewards and things like that. So we do that. That's relatively safe because ETH is ETH and our LST version of ETH is on chain, it's verifiable, it's transparent. Stable coins sometimes is where it gets a bit murky, especially some of these stable coins that are not really like one-to-one backed, but then they lend the money on to somewhere else. We have a
Yeah,
very thorough process to determine which stable coins are doing that and how they generate the underlying yield. For example, recent example was, Resolve. Resolve was actually not lending it on or anything. They just had a bug which allowed infinite mint, so to
yeah,
speak. So that was a smart contract bug. We had a max limit to resolve. Initially, we had some exposure, but we were able to unwind very quickly, and we had some other safeguards in place to ensure that we didn't lose any money on that trade. So the safeguards are various on-chain or off-chain agreements onto how to manage a certain position when it goes awry. We also obviously look at any stablecoin and whether or not the oracle is hard-coded to one. So first, not only do we look at a stablecoin, but we need to ensure that there's none of this oracle manipulation risk where everything's fine with a stablecoin, all the money's backed, everything's backed, but for whatever reason, the oracle got manipulated and you get liquidated. So many places we individually go into smart contract, and obviously we talk to the team, but also go into smart contract and verify if it's actually hard coded to one. Because if it's not, there will be many of those type of attacks. So we look at that type of stuff, we verify it. And then, of course, we use pendulum markets and so on. So pendulum markets are fine because you just fix the yield, right? There's none of the headaches of any depegs or anything there. You just get yield accrued towards maturity. And then, of course, the traditional looping strategies. With looping, you have to be very careful that the stablecoin peg is maintained to one. So a lot of scrutiny on who is running the stablecoin, the Oracle pricing mechanism, where it's listed, liquidity, and all of that. We can't avoid all the risks, but proud to say that since 1010, we weren't impacted by 1010, but Stream Finance blew up. A bunch of other people blew up after that, but we have not faced any losses so far. And yeah, even with Drift and stuff, we had no exposure there because, frankly, Drift had some issues that we knew about a while ago. Not talking about technically like DPRK attacking it, but just sort of protocol level that weren't that confident on operating there. So yeah.
That makes a ton of sense. And I think like the industry in general, when it comes to on the DeFi side in terms of risk underwriting, has a lot to improve on. I feel like sometimes the risk underwriting in DeFi just doesn't make sense. Like I think RWAs are still a relatively new concept to DeFi, and the risk underwriting just seems to not be there. Like I think today, Fluid put out a tweet about how they're going to change their Oracle logic to look at they're going to look at the secondary Oracle as well. But I think a key thing that they missed is that in a black swan event, if you have someone like DPRK, they're simply going to know that you're doing this. And unless your system is actually foolproof, they will simply just change the order of operations on how they're going to hack. And it doesn't actually add any safety. But it's just like this Fugazi risk management thing that they're like, oh, we're going to add another check to it. But like the real check is like, is this collateral still healthy, and making that check every time. And I think that's going to be increasingly important for stuff like RWAs, where you can't just look on chain, and protocols need to find ways, even if that's doing it in a centralized way, having these centralized checks on the assets, because ultimately, like as much as crypto punk as you want to be, if users are losing money because some RWA blows up, those users aren't going to return back, and the institutions aren't going to jump on chain because they're going to be like, who are these guys managing risk that don't know how to do it?
I think a
So
lot of people are doing that. It's funny. Sky, Maple are doing it, and Athena is heading in that direction too. They're effectively trying to become private credit funds in some shape or form. Now, the question is, do you expect crypto bros to run a private credit fund or shop, or do you expect 50 years of Wall Street pedigree to know what they're doing and how to attack certain points or manipulate certain points to get a certain outcome? Because crypto bros, I mean, in all honesty, haven't even fixed some of the issues in our industry, let alone attacking a private credit industry. So the blue chip ones, I think, like Maple is doing a fantastic job. They are over collateralized. They manage it well. I'm a bit concerned about some of the other people that have no private credit experience, who think now that they can rewrite the rules and manage risk better than how private credit's been doing it for many, many years with many quants and many giga brain, multi PhD sort of people. So the RWA stuff is interesting, but we need institutional grade people to understand how it all works versus some of the crypto bros. I mean, I'm proud to say, I think like you need people like, for example, Apollo, like the CIO Henrik and myself. We both spent many years in Wall Street, JP Morgan, and so on. So we know like how they do certain things. A lot of crypto bros have no clue. They miss obvious blind spots. The vault curator, risk manager market, whatever you want to call it, requires more people that have background in traditional finance and crypto both. Cannot have a pure play Wall Street fund only coming into it, and you cannot have a pure crypto bro coming into it.
yeah, that makes a ton of sense, and I 100% agree. I think that although the industry is getting there, there's still parts of it that are like very, very immature, especially on the risk side, and we're never going to onboard institutions unless we sort that out.
One of the biggest questions, open questions in crypto is: are the institutions coming here to give us money, or are they coming here to take our money? Right?
Take.
Feels like they're coming here to take our money because they're like, okay, there's this $150 billion in stablecoin sitting on chain that doesn't really know what to do. How about we take some of that? It's a huge amount of money. It's the GDP of many countries. So if they're able to get 500 million, a billion, a couple of billion from them, like they're laughing. And once you go into a real world asset that they control under in real world, because it's called real world assets, then they have their own fee streams and ways of cooking books, so to speak. While crypto bros are just, hey, I've got stable coins. I saw 10% yield and I just aped in without like knowing anything else. So hopefully we can come to a place where there's transparency, where they make money, we make money, we all grow together. Ideally, it's not that they come and take our money and we make none of it. So that's something that we watch actively and manage, in our portfolio as well.
Yeah, I think it's interesting to see as like Canton has had this big narrative of like being the institutional chain, but I still haven't come across someone who can tell me what is happening on Canton. It's there. Like you can tell that there's value being created, but it's like, is that the end state of things where institutions are simply just playing with themselves?
Yeah, I think it's. I've spoken to some people at the Canton team, and what they're building is interesting with privacy features and all of that. My question over there is, who's making money in this? Because Canton, especially for people in Australia, has the parent company was called Digital Asset or something. They were the ones that created the software demo and everything else around it. They've been around for a while. Obviously, the ASX project failed. Not failed because of the company per se. There were ASX governance issues as well. But the question over here is, there Citadel, all these other people have invested in it, right? But did they invest in CC, the coin Canton, or did they invest in the parent company's equity, which is digital asset? I think it's called digital asset or
I
something
think
like
so
that.
as well. Yeah,
So who's making the money? And if Canton is making money, what are the cash flows? Because it's not clear. Like, where's the money? Because right now, I think you just join a set of validators and you just get Canton emissions. Who is actually going into the open market and buying the coin, and for what, and what is the outcome? It's unclear. There are some speculations on, XYZ, people will buy it, hoard it, all of that stuff. But frankly, I've been in crypto for 10 years. And like, I've heard everything under the sun on like why people will
yeah,
buy a certain coin. And like, takes a lot to convince me. Like, why will people buy hype? Because, well, I can see the revenue. 99% of it is going to buyback. I can see it every day, any time of the day, and I know they're not screwing around. With some of these ones, it's just like, I can't see it. I just have to trust me, bro. And I've trusted enough bros over the years
yeah,
to not trust to not trust many bros anymore.
yeah. It's crazy. It's crazy.
um,
Bring it back to Hyperliquid. The most recent thing that they released, I think, is super interesting around HIP 4. Do you guys have a take on what HIP 4 is going to do for Hyperliquid? Like they already, I think, announced a partnership with Kalshi to bring their prediction markets to HIP 4. But I'm curious as to if Apollo has any takes about HIP 4. Is there anything that you guys want to see built on like this more binary form of market that would add to Hyperliquid?
so prediction markets really, really good. I mean, people love seeing it, but I don't know if I'm too old or whatever, but I've seen some of my friends go to Bet365 or Tab in Australia. You walk in and like they're the real professional gamblers. They just go
Yeah,
and they click through 16 clicks and do multi-leg parlay trades like
yeah,
before I can blink.
yeah,
Well, I mean, they've existed already and in regulated form for a long time, and prediction markets bought them on chain. Well, for poly market at least. So people, the novel thing over here is you can create like really stupid markets. There's no real market makers like an AMM style approach in that sense.
yeah,
You can create like really weird markets. So that's really exciting and novel for people. So that's great. I think Hyperliquid's a natural place for something like that to happen as well. So HIP4 is going to be good. Whether or not they're going to be able to steal market share from Polymarket or Kalshi, I don't know. But it's definitely a positive. And again, 99% of all the fees go towards buyback of Hive. So it's definitely positive. What I'm more interested about for HIP4 is if there's going to be dated options, so on chain. Right now, if you look at it, Deribit has practically all the volumes. Derive is an on-chain alternative that provides Bitcoin, Ethereum, Hyperliquid options as well. Hyperliquid would seem like a natural place, I think, if you were to create dative options, because a lot of the neutral funds, a lot of the other people that are doing sophisticated stuff, they would typically buy spot, do perps, and then do options as well. They'll try to do all three together. Hyperliquid already has really good perps volumes. Spot volumes are going up. If you can also do options within that UX, then I think they'll just kill it. And options is a growing market. I think perps, there's a competition between, is perps a better expression of risk or is options and that? I think both of them, like, people don't want to get liquidated while they're in their sleep. So options are great. And then perps are good for their own reason as well, because you can manage, there's no theta decay. You can hold it longer. You can like extend your position for another month if you have a view. For options, you get an expiry date. And if you're unlucky, you could be deep in the money and the following day you just make no money. So it depends on how people view it, how people want to think about it. But overall, I think if they can do dated options in Hyperliquid, that would be incredibly bullish. And I think it might actually end up making more money than like their spot markets and stuff today, because there's a lot of interest in doing options 24/7, even just for Bitcoin and Ethereum. And if they can get traditional like QQQ options and NASDAQ and S&P options trading 24/7, I don't know who the market makers for them will be, but they can do something like that, then man, that would be like, yeah, then Hyperliquid can do another 4 or 5x from here for sure. Like then, its valuation can go multiples higher, because again, 99% buybacks, like no other broker out there is doing that. So would be very bullish.
Yeah, 100%. I think the buybacks take is nuanced because it's not only the buybacks, but I think it's the first protocol that has committed to something seeming like it's not necessarily DeFi native, but I think buybacks are somewhat DeFi native and with actual revenue, not just like buying back with $100 a week. This is a ton of revenue going back into the token, which I think is really what makes it so compelling. We're gonna actually have Lido on the podcast next, and they're also doing options, and they're doing stuff with like the CFTC license as well. So I think Derive is doing great with options, and I'm super excited to see options on chain, as I think there's a lot to do. I think a lot of the times the frictions with options has just been that I don't think the pricing on chain has ever been really good. Most people just go to Deribit, and so that leaves options as a gambling tool on chain. And if you're going to gamble, like, you'd rather just use perps than options. So I think like if someone can execute on options with actual good pricing and not trying to sort of play it as a speculative thing, I think options have a lot to do on chain. And yeah,
But I think
personally excited.
you're right. I think a lot of people don't know this, but without naming names, if I go across 4 options brokers, including some on-chain ones, and I get a quote on a certain put or a call from them, they can be they can differ by 70% in terms of their pricing. 70. Look, I'm
Yeah, it's
happy if
crazy.
it's like 2-3%. I'm like, that's fine. It's still a lot. 70% is insane. So if I want to sell some options that I'm looking for income, in one scenario, I'm going to get $10,000. In the other scenario, I'm getting $18,000. So, I mean, it's significant on how just two different, like, even between off-chain brokers, like the pricing is wildly off. If they can solve it, Hyperliquid can solve it and always have sort of best pricing like it does for perps and spot often as well, then yeah, that's a huge, huge, huge market, because people trust the product. They just need, like, the level of trust is already built. So yeah, hopefully they can offer something compelling there.
Yeah, and I think like one of the biggest difficulties for at least on-chain option providers is that I don't think retail understands options at all. And so a lot of them just lean towards showing an APR on the if they're able to continually sell that option for the rest of the year, which it doesn't happen. It's not how options not how options work at all. Users don't know how to calculate the probability of the options being executed, and so I think it's just like it's why perps have dominated for the longest time. And maybe to wrap up the pod, coming back to buybacks, why do you think buybacks are working for Hyperliquid? Do you see this as the terminal state of Hyperliquid's, I guess, tokenomics model? Do you ever see the Hyperliquid team changing that number. Currently they're sort of sustaining themselves off both the token and 1%. Everyone was super bearish about the hype team selling their tokens. They sold them and it didn't end up actually mattering because they make so much revenue. Yeah, I'm curious as to do you think this is the terminal state that all protocols should move towards, using revenue to buy back the
The
token?
reason the reason why crypto and Hyperliquid was successful is because we have been dumped on and grifted so many times in crypto over the last decade because there is no look through to revenue and it being distributed back to token holders. There were protocols such as, Uniswap or SushiSwap or whatever you want to, throw in like 10 more there. We made $1 billion in fees last year because of debt. Where's the money? I didn't see any of that. Where is it? Oh, it's in the DAO. Okay, what's the DAO doing? Oh, we're giving $80 million grants to create two
Yeah,
YouTube educational videos. Like, hey, where is my money? Is the question. What have you done with this money that you made? I won't name again, but there's like many projects that are doing even more shadier stuff, which is they had equity and money and a token. They obviously tried to pump the token to the moon using various mechanics. They sold everything, and then they spun off and they said that, oh yeah, we pivoted and left the token just trading on the dust. And the founders with their equity then made another 50 $100 million because all the IP
yeah,
is inside the equity, not in the token. Like, what do token holders actually get? Like, nothing. There are no protections for them. No one's going to take them to the courts or jail. Like, who the hell is going to go through that process? Is just a big gamble back in the day. So, what crypto wanted, and I got murdered from it from peers in my own industry. Just like, oh, that's retarded that you guys are advocating for buybacks. You know, a growing company
yeah,
should reinvest in its growth instead of torching its money onto buying its own token. All of that, but I said because trust is so low and transparency in token holder rights are so weak, that is the only credible way that a protocol in crypto can build trust and can get the bulk of capital sitting on the sidelines because trust is permanently broken. Like there's no legal recourse. Founders can take their money, token holders can get dumped. Weird treasury, DAO, foundation stuff happen all the time. If a protocol is showing its revenue in real time and buying back, that's all the industry wants to hear, and they want to see it in a transparent manner. And that is what leads to success in crypto. It's different to Web2 VC, where oh, I'd never buy back, just keep on investing in growth. In crypto, I think buying back in a transparent manner works. So I think that's a fantastic model. Hyperliquid was a godsend in that way because a lot of other crypto projects have now been forced to do something like that. By the way, also their crypto project, their products just suck, and they go like, okay, we're gonna do our buyback. There are two cases in buybacks. One is they already dump from their treasury the equal amount that they buy back, so the net impact is zero, sometimes even more. And some of them actually decided to buy back, but because their product sucks, despite buying back, the price went down anyway. And then they come back onto X and they complain about like, well, buybacks is such a stupid strategy. Well, well, it's a stupid strategy because the product that you're making doesn't make sense anyway. So you're buying back your own product, but the product itself sucks, sort of. So I think if you have a good project, compelling project, you buy back, you give a strong signal to the market that we are committed long-term players here. We're not going to grift you. We're not going to dump on you. We're transparently buying back this much of our token, and the free market can decide whether or not they like it. So I think that's a good state. It's a terminal state. Whether or not Hyperliquid changes their inflation or their buyback model in the future is to be seen. They're so rich already, and it's such a small team. I don't see any need for them to do it at all. So think they're fine. They got decades of runway today. If they
yeah.
sell a fraction of what they haven't even run season 2 points. I don't think it'll be very difficult for them to run it now. I think, but they have a lot of tokens to work with.
Well, I think that's the biggest difference between the sort of the public market, like equities argument of like, just reinvest into growth because, if Hyperliquid did want to do growth, they'll just do a season two or something like that, right? Like if they actually needed to use something. But yeah, I think you're 100% right. Like that trust of the revenue going back into the token and knowing that there's this structural buyer is a big reason of why Hyperliquid has succeeded. And I think you're right. And also that I think it's pushed the market in the right direction as you have such a big project that is so successful doing these things that other people have clowned on for the longest time. And it's worked. And it's just, it needed the right scale to work and the right team behind it as well.
Other people have clowned on it because they were loving the gravy train. They were loving investors throw money at them with no legal recourse. Like the number of projects that we invested in a couple of primary deals. The number of projects where the founder didn't even say a thank you, goodbye email is insane. They'll take your money and they know, and they're like, well, sue me if you want, will be the answer. And sure, we've got like a legal counsel or whatever. Like, are we going to actually freaking go to the length of suing them because they're sitting in the Bahamas somewhere with millions of dollars? Like, it's insane. With equity, right? With like Web2 traditional equity, all the founders are fully KYC, AML. Like, if they run away, like they'll get hunted down in many authorities all around the world, right? But in crypto, it's weird. We're just like, you can take your money and disappear without a thank you email and no one's going to pursue you because there's no like real clear recourse. So that's why I think the token buybacks in crypto is unique and it's needed and more of it is needed. And it's good to see some
100%.
of the quality projects go into that direction. In fact, if any project these days still say, oh, we're just a governance token, they just get laughed out of the room as a non-serious project.
Love to hear it. Well, thanks so much for jumping onto the pod, and yeah, it's been great to have you on and chat about everything from what's going on in the world to Hyperliquid.
Yeah, awesome. Awesome being here, Abhi, and happy to do the next one in a couple of months.
Awesome, man. Alrighty, I'll catch you then.
Thanks.